Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So as we go into next week, we have seen gold prices break out to 8-year highs last week. Not only that, but the trade setup and trade idea that we went through with you last week on platinum delivered over 400 points. So well done to everybody who capitalized on that breakout. That's been a lovely fast move for us at the Gold and Silver Club. Platinum, of course, still very undervalued relative to gold prices, and in fact over 2020 these extraordinary times that we've seen for the markets do create extraordinary opportunities. In fact, commodities are now the best performing asset class of 2020. The second quarter of 2020 was crude oil's best quarter since September 1990, gold's best quarter since Q1 2016, in fact up 7 quarters in a row, silver's best quarter since Q4 2010, and platinum's best quarter since September of 2012. And this is just the beginning. We're still in the early stages of this new bull market for commodities, and historically each time commodities have posted an exceptional first half performance, they go on to generate substantial gains in the months ahead. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Firstly, moving over to gold here, which closed on Friday at $1,774 per ounce and tapped 8-year highs just last week on Wednesday, the 1st of July. As we head into a new week here, and indeed a new quarter and the second half of the year, I would drop the chart into the monthly time frame here. If you observe the monthly chart here, you will see what a critical level 1800 is going to be as we transition into a new quarter here. Essentially, if we break and close above 1800, this is where we open up the door for a retest back towards the 1900s. If we can break and close above this level throughout the next quarter, as you know, typically the metals are much stronger over the months of July, August and September. However, on a first test of this level, if we have a failed move and gold has the inability to break out at this level, we've seen that previously 3 times during 2011, it's quite possible we could get a pullback here at these zones, in which case we want to be buyers on a more significant pullback on gold. We've mentioned this multiple times before, but you don't want to FOMO into gold and buy it when it's too high. It's very liable to sudden and quick corrections when you do see gold consecutively go up like this, and you want to be patient, wait for those opportunities to buy on the dips and then capitalize on the subsequent rallies. So going into next week, it's an important decision point here for gold, whether we're going to be able to build up some further momentum, break out within a bull flag here and take out the recent highs and then run up towards 1800 in gold's spot price. And then once we get a test of that level, whether we're able to break and clear above that level, in which case this is where we start to make a move towards the Goldman Sachs target of 1900. However, at this point, because we've already seen a significant run up in gold prices over the last month here, it could be that 1800 is the short-term top here. We've hit 1800 on the futures market and we start to see a bit of a pullback here going into next week, in which case we are very interested to look out for opportunities to buy back lower on gold. We want to be patient, buying on the dips, not FOMOing in, buying at the highs where many traders get trapped. So another great example here was the bull trap that we had on Wednesday, where gold prices broke out to $1,789 per ounce and they subsequently pulled back 300 points just on that day, and again on non-farm payrolls before retracing later on in the session. Then what I want to take your attention over to is platinum, and again, well done to everybody who capitalized on this move last week. In fact, it delivered over 500 points, and that was a bigger trade than gold last week. We went through in detail with you on the week ahead commodity report. Many of you have been in touch that you managed to catch that move that we identified with you on platinum. We hit a key area of liquidity around that $800 per ounce zone. Platinum prices last week, they broke out to $863 per ounce here on Thursday. So that was really fast profits there on platinum. It delivered more points and a bigger percentage move than gold last week. Now, as we go go into next week, we do still have exposure to platinum. We built our positions in the previous week. We're in some solid profits on that trade going to next week, and now we're going to be managing that. What I'm looking at next week is whether either we can build up some momentum here with platinum, have another retest back towards $850 per ounce. If we can close above that level, we start to build up momentum back towards the $900 per ounce level. Now, typically over the month of July, platinum does outperform gold. Silver as well outperforms gold. On the flip side of this, if we roll over back to our area of liquidity again here, back towards the $800 per ounce level for platinum, I'm looking to re-establish positions again at that level, which has also been a significant area of resistance going back to April and the beginning of May turned support. So if we were to see a bit more pressure to the downside going into next week, this is an area I would be looking out for buying evidence again for platinum. Then moving over to silver. So the gold to silver ratio has been breaking down in the last few days, and silver, as we mentioned last week, if we were able to break and close above $18, we would have a retest back towards the swing highs. That is exactly what we've seen here. We've retested $18.43 per ounce, again a bull trap at that level, which is why you do not want to FOMO in and buy at the top of the breakouts in any of the precious metals. You always want to be looking at getting in on the dips at the moment when we are seeing these great opportunities to get in day to day and week to week. You've just got to get your timing right with respect to the daily cycles, the weekly cycles, the monthly cycle, and the quarterly cycle. You need to know where we are at within those cycles. So right now, as we transition into July, typically silver does outperform gold. What silver needs to continue to do, though, is hold above $18 per ounce on a closing basis. If we can build up some momentum going into next week, break back above Thursday's non-farm payroll dip and Friday's high as well, this is where we'll potentially get a retest back towards the swing highs here. And then, of course, if we can break above those swing highs, this is where we make the move back towards the highs that were put in January and February, $19 per ounce, which, of course, is also the Goldman Sachs target they put out there for the retest of $19 for silver to hit that within the next 3 months. If we don't build up momentum beyond this level, though, go into next week, and if we do see a further corrective move on both gold and platinum, and if this is where we can come back down to the lower end of the channel here, back towards $17.60 per ounce, at that level, I would be looking for buying evidence for silver. We've ran into this zone a number of times throughout the last month, which has been great buy opportunities for silver here, and I would be looking to see whether silver can hold that level and provide an opportunity to then buy for a potential breakout as we continue throughout the month. Also, the gold to silver ratio. We've mentioned it before, but when the gold silver ratio is going up, this will put pressure on both gold and silver. When the ratio is breaking down, this is where gold and silver will be well supported. So you definitely want to keep an eye on silver, certainly platinum going into next week, and of course gold. Now moving over to oil, as you mentioned, crude oil has had the best quarter since September of 1990. And if you have a look at the weekly chart here, crude oil is up 6% in the latest week. We've continued to see range-bound price action where the best opportunities here have been to buy in at support around the 35 to 36 US dollar per barrel handle, then taking profit at the 40 to 42 US dollar per barrel level. So if we have a look at the daily chart, we have seen quite a tight range shift over the last 4 days where we're just ricocheting between that 39 US dollar per barrel level up towards that 41 level at the moment. Typically, oil doesn't spend much time within these tight ranges, and this really builds up nicely for a breakout as we go into next week. If we can clear above the weekly highs here, this opens up the door for a retest back towards $42.50 per barrel, which in fact was the zone that we broke down from with crude oil back at the beginning of March at the start of the price wars here. That would be the level I would target for a breakout here going into next week. If we don't see that price action and we continue to retrace, again, look for buying opportunities around 38 and 39 US dollars per barrel. But if we break and close below that level, then we're likely to get a retest back towards 36, which has been the recent swing low from the middle of June. So at the moment, the best way to capitalize on crude oil is very simply trading the range, but look out for the opportunity of a breakout here if we can clear above the weekly highs here as we go into next week. As we mentioned at the start of today's report, extraordinary times that we've been in throughout 2020 have created phenomenal opportunities on the the commodity markets. And if you haven't been making money so far this year in 2020, where we're 6 months through the year, you absolutely should be. There's just been some incredible opportunities to really profit fast from the moves that we've seen this year. In fact, gold just last week, of course, broke out to 8-year highs. And this is where a research-driven approach is able to give you edge in the markets. What we found is many technical traders out there throughout this year have been chopped up. They haven't been able to make money utilizing their 100% technical based strategies, and this is where strategies which may have worked a few years back are not going to work in today's market conditions, where you need more of an edge in the markets. You need to be utilizing much more data, and of course trading the same way as the hedge funds, the money managers, the professionals and the institutions do. You want to utilize the same approach in the markets, not the old retail way of utilizing technical analysis using outdated techniques, which quite simply is a lazy way to trade. And these days around the world, where we've seen central banks cut interest rates due to the impact of COVID-19, this means you need to really take control of your finances and make sure it's in the right vehicle for you to generate profits fast in a recession-proof way, so that you can take total control of your finances and manage it and learn yourself how to trade in the correct way. So if you would like to learn more how to become a member of the Gold and Silver Club, learn a research-driven approach to the markets, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below today's report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.